There is a silent requirement at top Wall Street firms that has absolutely nothing to do with finance. If you look closely at the backgrounds of the world's most aggressive hedge fund managers, they share one bizarre obsession: chess. But they aren't playing for fun. They are training their brains to do something 99% of retail investors fail at. They are learning how to calculate risk when the stakes are devastatingly high. Most amateur investors treat making money like roulette. They chase the next hot trend or emotional hype cycle. But in both chess and high-stakes finance, hoping you'll win is a guaranteed way to lose. The core problem is something psychologists call tactical blindness. This happens when you get so hyper-focused on an immediate reward, like winning an opponent's pawn or catching a quick 5% gain on a stock, that you completely fail to see the trap your opponent set for you 3 moves ago. Wall Street recruiters don't care if you know how to read a balance sheet. They care if you can spot a trap before you walk into it. To survive in chess or business, you must adopt the 3 positional frameworks used by grandmasters. First, positional sacrifice. In chess, a master will willingly give up a valuable piece if it secures a dominant position on the board 10 moves later. In the financial world, this means giving up short-term comforts, like spending money on lifestyle upgrades, to invest heavily in assets that give you asymmetric leverage later. Second, calculating the forced move. When a grandmaster plans an attack, they don't look at what they want to do. They look at how their opponent is forced to react. If your side hustle or financial plan relies on everything going perfectly, you have a broken strategy. You must build models where even if the market shifts, your next move is statistically protected. Third, the empathy matrix. You cannot win by only looking at your own pieces. You have to play the game from your opponent's side of the board. In business, your opponent is market saturation, changing algorithms, and consumer fatigue. If you don't map out their moves, you are playing blind. Understanding the strategy is step 1. But knowing how average non-professional players are actively translating this exact mental framework into cold, hard cash is where the real game begins. In our next video, I am breaking down a step-by-step blueprint of how an average 1200 rated chess player built a $500 a week side hustle using 0 of their own capital. Click the video on your screen right now to see the breakdown, and I'll see you there.